Hi everyone, welcome to IIBX, beginning of gold's golden years in India. My name is Karunya Rao, and joining me today is a very exciting lineup of guests. So let me just go straight up and introduce the panel to all our viewers. First up is Mr. Sudhish Nambiat. He's the head of Indian Gold Policy Center at IIM Ahmedabad. We have Mr. Ashok Gautam joining us. He's the MD and CEO IIBX. Mahendra K. He's the country head of Precious Metals Division at Karur Vysya Bank. And finally, we have Mr. Paresh Hede from Refinitiv. Gentlemen, thank you so much for taking time out and chatting with us today. Okay, so let's get started. I'd like to begin the conversation with Mr. Nambiat. There are several issues when we talk about gold, especially jewelry. There's lack of transparency, discrepancies, a lot of concerns about the quality of gold that you purchase. How exactly is the scenario right now? Of course, there are regulations that are kicking in slowly with respect to quality. There's hallmarking, etc., that's being mandatory. But how do you view the situation as it stands?
So, talking about the current setup of uh, of the transformation that's been happening in the Indian gold market, uh, look at it. One of the prime things that's on building the confidence among the consumers about the kind of products that they're going to get, whether it be the refined bullion or jewelry. So there's a hallmark that became mandatory that ensures that uh, mm, uh, the 14, 18, 22, and 24 karat jewelry are all hallmark pieces is what that they get. So the consumer confidence is one thing that is being or the protecting the consumer interest is what is being worked on largely. That's on the domestic space. But if you're looking at the whole set of why the various market infrastructure institutions that are being come up, that like IIBX or the Domestic Spot Exchange, the primary goal here is to create transparency in the trade. One, transparency for not for government assets, but it is a transparency for those stakeholders across the value chain by bringing in various levels of disintermediation. So IIBX in this case brings in a disintermediation is by being able to supply gold directly to the retailer. Maybe you can call it as a qualified jeweler or a bullion dealer directly without they depending on a nominated bank or nominated agency. So in this process, they eventually are able to make quite a the markup that they tend to lose out to the suppliers is something that they're able to make up over there. That's in short. So as we discussed, I will come more on that front.
Ashok, how is IFBX looking to address these issues, whether it's discrepancy of prices, quality, or any other concerns and challenges that surround the sector right now?
Thank you very much for giving me the opportunity to be on this show and through your show, reaching out to a much larger audience. India International Bullion Exchange (IFSC) Limited has been set up in the IFSC area of the GIFT City, which is the GIFT SEZ. This is essentially a US dollar area. So what we have attempted to set up is an international bullion exchange. The idea is that can this international bullion exchange be the gateway for bullion import in the country? As you know, today bullion, uh, both gold and silver. So we'll first talk about the gold as of now. Is imported in the country through nominated banks and nominated agencies. So now there is another channel which has been allowed. So DGFT has issued a notification whereby an entity which is uh, meeting the requirements of being called qualified jewelers can import gold through IIBX. For this, our regulator IFSCA has set up certain norms. If those entities meet those norms, then they get to be called qualified jewelers. And as a qualified jeweler, they can come on the exchange and put their bid to take the gold bars. Uh, what we are trying to do on exchange is, as Mr. Nambiat also said, On the exchange, you get the price transparency. There is a very democratic way of dealing on the exchange. So the prices are what you see, is what you trade, is what you get. This is one thing. And second thing, what we are trying to attempt is that by setting up this international exchange in the free trade zone, we'll be able to also attract the global players to come there and start trading. So there will be two parts to it. One is enabling the import in the country. Second is to provide a platform for the international players to come uh, park their gold in the vault facilities which are coming up in the IFSC area and start trading and making prices for the gold. What we are quite hopeful is that because of the stringent supply and quality norms which will be stipulated by the exchange, we will be able to provide the best quality gold, A, and B, the best price which will be available through price discovery. And we believe that the qualified jewelers who will be coming on our platform will certainly be benefited from this trade. And not only they, because these qualified jewelers in turn will be making the use of this gold to make jewelry
Hmm.
and do further trades in the country, it will be overall beneficial for the economy also.
Since you mentioned price discovery, how exactly is IBX going to enable this?
So as you know, on an exchange, there will be various players who will be coming as a supplier, and there will be various players who will be coming as buyers. And similarly, one of the lots of that will be the qualified jewelers who will be coming as the entity allowed to import. So on an exchange, as you know, the buyers and sellers are there. They put their bid and offer, which is visible to all. And as the bid and offer start matching, that is the price which gets traded. So that is the transparent price which is available to be seen by everyone who is coming on the exchange. It's not that you are a big player or a small player, so you will get different prices. So
Hmm.
as you know, our trading will be in the form of bullion depository receipts. So the 995 bars will be in the 1 kg lot, and the 999 bars will be in the 100-gram lot. So these BDRs can be very freely traded. These are the notified securities which can be traded on the exchange, and it will certainly provide a lot more flexibility for the qualified jewelers to put their bids and get the prices which they see, and then they get those prices.
Arun, government, as we all know, recently launched the country's first international bullion exchange. But talk to us about this new ecosystem. Does it have everything it takes, so that the glittering commodity can operate seamlessly?
Surely. Arun Kumar here. See, when one of the visions of Prime Minister was that we should be the price setters for some of the largest traded products. This was one of the vision statement that the Prime Minister Honorable Prime Minister had mentioned in 2017 at the time of launch of India International Exchange. So this establishment of the bullion exchange is taking this step for little forward because for bullion, what happens is India is one of the largest consumers of gold, second only next to China. So after being the largest consumers of gold, and still we are taking prices from international venues rather than being price setters. So this in a way, and the setup of this international bullion exchange, in fact, was envisaged during the budget of February 2020 by the finance minister, and then post that the IFSC was set up, and then IIBX was established. Uh, so the interesting thing in GIFT is that everything is traded in a currency other than INR. So even bullion is going to be traded in US dollars. So that being the case, I think we will be taking this, from the point of view of taking it forward with the PM's vision of being price setters going forward. And at least, if not a price setter, at least price, at least in those directions we will be moving.
Mahindran, why don't you also chime in here with your views? Because tell us what are the possibilities that you foresee with IIBX, especially for the smaller and medium-sized traders.
Yeah, I think firstly, I would like to take this opportunity to quickly congratulate Mr. Ashok for taking over as Indian CEO of IIBX. All eyes are on IIBX. As Mr. Arun also said, India is one of the largest gold consuming country, the second largest, almost 1,000 tons. And in any market for that matter, we the consumer will have a share in trying to have a say in the price. But unfortunately, in the case of gold in our country, though we are the second largest consuming country, we don't have a say. So the one good step which has happened now is with the launch of India International Bullion Exchange. There will be larger participation, global participants in this. People will be able to quote the prices, quote customers across India would be able to participate. Of course, there are some definitions and parameters under which people can trade. So this is definitely going to open up a lot of opportunities. And when people talk about transparency and price discovery, I've got a different take on that basically, because the whole ecosystem and the bullion system as it is prevailing with other countries is not available in India. For example, if we take the case of China, it's one of the largest gold consuming country, but at the same time, it's one of the largest mining country also for gold. So the system which prevails there is totally different from what's happening here. We are predominantly being importing gold, and the consumption has been going on for quite some time. And then as a banker, I mean, KVP has been into this bullion banking for the past 2 years. Of course, we have a team of people in our bank who have been well versed with the bullion trade. What I would like to say is, as a banker here, is we are being governed by regulations, both RBI and DGFT, and the role of the bank is to see that we import gold as per the norms which has been stipulated by them. As I said, we've been importing gold for many years. 1,000 tons in the last year is not a small quantity. So there's been some sort of a system which definitely goes to talk about the kind of transparency which has been there. I mean, it's the transparency always be there. Maybe it might add a little more in terms of transparency once the bullion trade happens, and the kind of participants which we're going to have there who will be more not just the domestic players, who could also be the foreign global players in that. That's the kind of transparency which I envisage is going to happen. And as Mr. Ashok also said, that in terms of the exchanges which we have, we do not have anything which trades in gold on a spot basis, which is now going to happen here in India with the opening of IIBX. Of course, the SEBI has also come up with some guidelines to having another spot exchange onshore along with offshore. So, I mean, it's definitely going to be rosy days ahead for all of us, all participants. There should definitely be some sort of a teething problem for any new thing which is going to happen. But the government, as it said, has opened up many things in the sense that we need to be a major player, a major participant in terms of pricing, in terms of our gold, which is there here, which has been accumulated for so many years, has to come out of the shelves because the impact of gold as a commodity has got the bearing on the CAD, on the outflow of foreign exchange from India. So all these factors may have resulted in we having to come across this IIBX in the future.
Paresh, coming to you, how do you think IIBX can help, facilitate more liquidity in the gold market?
Sure. Thanks for having me. I think most of the participants have talked about how IIBX is going to change the entire dynamics around gold. I mean, we are the second largest importer after China. And I'll talk a little bit specific to China a little bit later. But I think, basically we're talking about an exchange. And as Mr. Gautam said, an exchange is an equivalent place where, buyers and sellers come together, discover price, transparency, purity, quality. I mean, we've seen that in other asset classes, right? I mean, in India, we have the most thriving and the largest futures market in the world, simply because we've got a set of guidelines which allow exchange trading very, very effectively. I think the same IIBX is probably going to bring the same sort of transparency to gold trading, because today, if you see, gold is imported on consignment basis. There are lots of challenges around that. Prices across the country are different. This is one gateway that allows us to sort of show one price, multiple sellers and buyers can come together. Both Arun Kumar talked about the Prime Minister's vision, right, which is in terms of getting us setting pricing for one of the most important commodities from our perspective as a country. So I think as more and more participants come in, and as this sort of proliferates, spread of good word, etc., I quite clearly see that this is going to be one of the major trading venues across the world for gold trading over the next few years. And I do want to mention one in terms of what we've seen from our experience is something that China has done before. China has set up the Shanghai Gold Exchange, almost a similar model where there's an offshore gold exchange which sort of allows traders and participants to come together. And if you just look at the success of that model, clearly, IIBX is looking at some great possibilities in the future.
Paresh, do you think IIBX has the potential to sort of enable greater integration with other segments of the market, uh, and perhaps establish India as dominant trading hub in the world?
Absolutely. In fact, the idea of the whole finance center was around the fact was, trying to make India more, tradable across this thing, right? I mean, we have a little bit of issues around convertibility of currency, etc. But look at what GIFT and this international exchange does, because the idea is, to sort of correlate, our markets closely with global markets across asset classes. We've done a fair bit on the equity side. You see very seamless flow of FII, FDI flows into our markets. Similarly, we've done from the RBI perspective, we've done a lot on the currency side as well in terms of allowing trade between us and other countries. I'm quite sure that gold bullion being such an important commodity to our national interests and to our economy. I think, and by the way, this is all dollar denominated, right? Currently, so it is linked to foreign exchange, etc. So I think this is all, sort of going to put us strongly in basically a place in the world.
Okay. Siddhesh, can you also tell us what's in store for the average buyer? Can he or she purchase directly from IIBX?
Okay. So by when it can be done is something that I leave it to Ashok. So yes, through the LRS, it can be enabled for a retail investor to directly access IIBX and buy BDRs. So BDRs in that case, which will have to be denominated of a lower uh, of a lower value. When I say lower value, the currently we are talking about 100 grams and kg bars. So if you're looking at smaller investors who want to accumulate as a accumulate the gold in the IFSC zone through the IIBX, then we may want to start looking at having in 5-gram BDRs or the 10-gram BDRs. So that's one opportunity. And later, even if one starts to look at, let's say, launching an ETF through the exchange, so that again opens up new opportunities. So as you see here, the biggest advantage that that the retail investor has is a duty differential. So one doesn't have to actually lock in the differential duty amount. The duty amount actually gets free, and it's about 10%, 10.7%. Uh, and over a period, it's actually turns to be really high when you're accumulating it. So yes, retail investors would have a direct access at one point in time. Maybe Ashok would throw more light on when it could actually be possible. Uh,
Yeah, Ashok, why don't you tell us?
Okay, so let's go by step. Obviously, with the opening of this India International Bullion Exchange, and as we go on, we'll have to think of lot many financial products around the bullion ecosystem. Let's talk about gold ecosystem, and that is something which would be our first intent. Let's understand it step by step. Okay, so what we are saying, qualified jeweler, we have already explained. Then we talk about the traders who come on the International Bullion Exchange, and they buy and sell BDR, which is backed by the physical gold. Essentially, this is a spot exchange where we have contract today on T plus 0, then also T plus 2, and later we'll see how we progress. Uh, so what you can do is in a T plus 2 contract on a basis of a margin paid, you can uh, trade in BDR, and at the end of the period, you can decide to either square it off or take it into your account. These are for the trader. So are we looking at creating wealth banking and from the private banking side products for the wealthy individuals across the globe? I'm not only talking about the LRS because that is something which I don't want to talk at this point of time. I will only talk about the NRIs, access of NRIs to IIBX, access of other wealth banking clients across the globe. As you know, in our IFSC area, international banks have opened branches of their international entities. So they have access to wealth banking clients, large clients who would at some point of time like to invest in BDRs. So why not? If the global investors want to invest in US dollar denominated gold products, please start looking at IIBX, and these will be, we're launching these products as we go on. Another thing which we'll also have to create is how do we also bring in other financial products? For example, can we think of accumulation plans? Can we think of periodic investments plans? We'll have to also see that how mutual funds create products related to ETF. Those ETFs get listed on our exchange, and not only that, can we also think of repo products being launched where the BDR, which is in the account with the depository, can the dollar be lent or borrowed against it as a collateral security at the exchange? There are a number of things which we have to look at. Not only that, we'll have to also think of gold leasing products. We'll have to also think of gold metal loan products, and possibilities are enormous. We'll go as we take these steps one by one. But I firmly believe, and this is what I keep on saying, that for us to settle the things on qualified jewelers, enabling them to import gold through exchange becomes our bedrock. And this is something on which we are working. And we believe we'll be able to give fairly good value on that. And later on, all these products will be built on. And these are just illustrative. We have a 5-year plan already, but we'll go step by step.
So, will other countries also be allowed to store their gold here? And is there any, update on the security measures?
I'm so happy that you asked because I probably missed that. And this is also one of our intentions that on our exchange, our South Asian neighbors, they actually clients from there, they also come and trade. And not only that, why not the central banks of other countries, buy the gold from us? And as you know, on the oil side, country has already created large depots where oils are stored, and here we are creating the world class vaulting facilities in IFSC area. And probably at some point, I'll request you to come and do a program on the vaulting, facilities which have been created or are being created in the IFSC area. And you should also know, and your audience should also know, we would probably be providing in the globe the cheapest vaulting facility with meeting with the best of the international standards. So the plans would also be where the gold which is in our vault and the gold which is in London vault,
Hmm.
whether the entities who are on this exchange, can they do a location swap between two centers? Can our vaults be also used by other countries to store their gold? And we can think of number of such things, but our aspirations are international, our aspirations are global, and that is what IIBX is there for.
All right, point noted. Arun, Will it be cost effective for importers to bring gold through exchange rather than through consignment basis? Is it a prudent idea? And if so, then how will it work?
See, well, one thing is that we are referring to transparency. All the whatever the price at which the gold is getting imported is on the exchange platform. The prices are pretty much clear. So from that point of view, we are very clear that at what price the gold is being bought in. Further, when it comes to the existing route, if you look at it, there is a intermediate leg when the nominated agencies are allowed to import the gold. So via the exchange model, what is happening is this leg is the intermediate leg is going away. So that being the case, certainly that margin that is available that is cut down. From that point of view, certainly it will be much effective to come to the exchange model.
Okay.
Karuna,
All
if
right.
I could explain further on that.
Sure.
See, we need to put this in perspective of how it is currently and what it's going to be in the future when the IIBX starts off. So, in the current model, a supplier would be bringing something like 500 kgs and leaving it on consignment at various locations in India. And as and when the demand comes, it's being supplied to the local market. So, so the supplier typically takes a consignment premium here because the metal is not being priced; it's being held here, and so it's kind of it's in a different way of free credit that's been offered for the domestic, but at a cost which they are not aware of. What is the kind of cost that is inbuilt into it? And there's a difference in cost of when you're bringing in a 500 kg gold and you're bringing in a 1 ton of 1000 kg of gold. So what eventually happens is that through IIBX and the various centers that are going to be come across India, which are IFSC or FTWZ, one can park gold in these. One can get the gold at much lower cost, hold it as a BDR, and at any point in time, there's a qualified jeweler wants to place an order, they get it directly. So what all they are going to get away with the consignment premium, the premium to the premium that is being paid to the bank, the cost of holding that is being there. So these are things that are being covered. Uh, and these are the kind of costs which for all these years have been subsumed, wherein like nobody is actually aware of because of the uh, because of various layers that comes in. This is how what Mr. Arun was talking about, that disintermediation comes in and takes away that, so adding more value to the end user.
Understood. Okay. Thanks for giving us your view on that. Mahindran, how exactly will the audit happen? What will be the process of verification? Can you shed some light on that?
I think on the audit part of it, I think it would be Mr. Ashok would be appropriate to talk about it. There are certain guidelines which IFSC has come out with, and I think that's going to be followed. But I just wanted to add to what Sudhish and Arun were talking about in terms of costing. The intermediate, the cost would not be there. See, basically, there are two different models. As of now, we have the consignment model where the banks get the gold on behalf of the customer, parked at various airports or various zones here. And now the gold which comes in here is being kept by the overseas supplier. But whereas here, when IBX comes, the customer who wants to buy the gold, he has to pay cash upfront to buy the BDRs. So that's a differentiating factor in terms of costing. Besides that, we're talking about 5 grams, we're talking about 50 grams, we're talking about 500 kgs. So when it comes to quantity, I think the pricing would definitely differ for the direct importer or the consumer. Whereas all this has been buffered in the existing system, which is a time-tested system. I'm not saying that it's going to be expensive or going to be less, but then these are the factors which are prevailing now, which will have a different dimension when people are parting with the money, pay dollars to buy the BDRs, and then get the gold into their systems. That's one point which I want to clarify.
So in that case, I would
with regard
add a
to
further debate to that.
Okay, anyway, with regard to the audit point of view, I think Mr. Ashok would take it forward because there are I see some guidelines which is already there, which has come up in terms of how the audit is to be done, in terms of arbitration and things like that.
Ashok, why don't you share that with us?
Okay, so I'm not taking the bait of getting into that debate, whether this consignment model or the, exchange which will give value. I think uh, the consumer in any case will finally decide, uh, and unless it's a marketplace and the marketplace will flourish, which actually, consumers find that they get value there. So we'll leave it to that at this point of time. But I mean, both sides have their own views on it.
No,
Now
I was
coming to
talking
the
about the audit
yeah,
guidelines.
yeah, I'm coming to that. I'm coming to that. I was just responding to the
Uh,
points which are going on between, yeah, because I thought that is also important. And now let's come to the audit part. So obviously there are guidelines which have been issued by the regulator, and our exchange also has come up with certain guidelines, and there are a little bit more work is also in progress. As you know, there is right now one vault which is there in the IFSC area, which has been given approval by the authority, and there are other vaults also coming up. And as Mr. Nambiath mentioned, we hope that at some point of time we will have more centers across the country, which where the vaults in the free trade zone will be under IFSCA. So obviously, when the in the physical form is there, there would be various checks and balances which will be built in, so that at any point of time, when the audit is done, so audit would entail 2 3 points. One is obviously the quantity which is there. So if we have XBDR in the depository, whether there are gold bars there or not, so obviously that will be ensured. And then certainly the next point was regarding the quality. For the quality, we are also what we are doing is there will be an assayer also appointed, that in case if somebody has any doubt or dispute regarding the quality, that assayer will be there and he will be able to certify that. So in any case, many of these things are ab initio taken care of because of the stringent sourcing norms which have been put on the exchange. But nevertheless, audit is a very important task which will be ensured. So there would be occasions where we exchange, acting as a frontline regulator, will have their own audits. Depository also will have their own controls there. Another thing which we are trying to do is, bring it on the blockchain, many of these things. So at all points of time on a distributed ledger basis, various stakeholders, so that is the depository, the clearing, the exchange, the vault, and even the customs, they all are aware what gold bar is where in which vault. So I think as we go on, these are the things which will give a lot of confidence to the industry and to the suppliers and to the buyers, and we will see robust trades happening in through IIBX.
I want to bring in Paresh as well. There's a there's a general perception in the market at present that this exchange will help only large bullion dealers. Firstly, if you could help us understand why does India need a gold spot exchange in an offshore location, and what would be the benefits for participants at large?
Well, again, I think probably I'll try to answer part of the question in terms of just why does this make more in terms of just participation. I think there are guidelines laid out in terms of who can participate and who cannot. In terms of I think your question is more in terms of can retailers participate, etc. I think we'll get there in some point of time, but I think the two things, right? When you set up an exchange, and that's been seen globally, especially with respect to bullion, the best example for us China, which has already done something like this, and we've been part of that process as London Stock Exchange Group and Affinitive. What we see is that as I mean, you open a very transparent, trading platform like an exchange platform. It just brings buyers and sellers together. Uh, Gold, as everybody said, is such an important commodity for us as a country, as an economy. I think it's best that it's something that I think we should have said some time back, but it's obviously the processes, etc., were sort of had to be sort of defined. This is the first time we're trying something like this. Um, I think, I mean, and you can just see, from the example of, markets like, the equity markets today that, that are there, well functioning equity markets that we have in India, right? Look at the depth and the liquidity that they have brought to the country. I think a similar thing can definitely happen in the area of bullion and gold, because simply having a transparent exchange mechanism just brings on liquidity, and liquidity begets liquidity. Um, I think one important thing that people need to take care of is finally everything is pegged to a currency, which is the US dollar in this case. So there is, and Mr. Gautam talked about bringing more innovative products like repos, etc., to the value of gold, etc. And now again, all of that pegged to foreign currency. So I think it's important that people also, figure out good hedging mechanisms when they're trading on these platforms, because there is a currency volatility that also plays around in this things.
But since it's
Just
coming in an offshore location, how could trade disputes be taken care of?
I think it's any grievances is it usually goes to IIBX and the IFSCA, and IIBX is expected to resolve. Just in case it doesn't happen, then goes to Gujarat High Court. That's where it works. Now IFSCA is coming in an arbitration mechanism in place, arbitration center in place. So that will eventually would be taking care of the kind of various trade disputes that would come in.
Yeah, I think you have covered Nambiarji, and this is essentially how it is. And regarding the disputes, obviously we all believe that there will not be any disputes, but we all have to be ready for it, because in the trade any eventuality can arise. Obviously, there are mechanisms which are there. So IIBX as a frontline regulator will certainly be stepping in, and but obviously whenever there are issues which cannot be resolved at our end, the regulator obviously steps in, and there is a good Gandhinagar High Court where the matter after that can be uh, taken up.
At what point of transaction does import duty have to be paid, Ashok?
I think that is very clear. So once you have the BDR in your account with the depository, and you have an intent to take it to the DTA area, that is the point at which you have to pay the import duty. It's very clear, and our depository is also very proactively working with the customs authority. They are also working on developing a API, so that on an online basis the information can flow to the customs, that for ABC client, this is the quantity which is getting converted, that is the BDR is getting extinguished and it is getting converted into the physical gold, and this needs to transfer to the DTA area. So at that is the point of time where bill of entry will be prepared, and the customs duty will be required to be paid. And now there is then it's the usual process. The all the players who import, they know how the customs duty is to be paid, so the usual process kicks in.
Karunya, you had asked about is this going to give a more power to bullion dealers? I think that's a question that needs to be more detailed here, because it's actually a myth that it's going to be more power to bullion dealers. Because when you look at it, there is this qualified jewelers. The criteria is very simple, just 25 crores. And look at the number of jewelers that actually fit into the 25 crore criteria. So many number of jewelers are going to come in here. Okay, that's one part. Secondly, you look what is the volume that are happening in the gold metal loan space. It is annually just about 120 tons, and the rest, 500 to 550 tons, is actually outright business. So those all those outright businesses who are ultimately buying it is the jeweler. So jeweler are the one who are going to create the market here, right? Bullion dealers again would be an intermediary for facilitating many smaller jewelers in the class 3 and class 4 town. That's why we envisage that they would be more expanding the business towards, and rather than concentrating in the city-based jewelers or class A-based jewelers.
Okay. Arun, any closing comments from your end about the possibilities that IIBX brings to the table, whether it's price discovery, integration with other markets, or anything else that you'd like to add?
Thank you. Surely. See, there were questions upon why we need a gold spot exchange here. Now, and in my earlier thing, I had mentioned that we need to be price setters. Now, if you look at the gold that is being traded in India, also it is in INR terms. Also, there are various other factors in the pricing that is built into, like the duties, the delivery cost, everything. So, from that point of view, although we are one of the largest consumers of gold, and the quoting is in INR, so we may not be, we're not able to set the price. But here, what is happening is we are quoting based on international prices in dollar terms. And as Mr. Ashok Gautam had mentioned, it is going to be based on international prices, and the customs duty applies only when there is the intention for them to import it into the domestic tariff area. And what is important is also what we are looking at is what we are trading is the BDR, bullion depository receipt. Now we have got physical gold which is backed by a bullion depository receipt, and when the trading is happening here, and whenever you want to import, only at the time the customs duty gets triggered, because then you can say you remat the gold and take it back into the domestic trade area. So from that point of view, I think we are in the right direction for to ensure that we have we establish a proper market. And although a lot of jewelers are a lot of imports happening from outside into India, if it is happening to the IFSC, then we will be able to establish a proper market here. Thank you.
Okay. On that note, gentlemen, I'd like to wrap up the discussion. It was very engaging. We've got to know all the facets and nuances of IIBX and how it can facilitate traders of various stages and various sizes, and what it brings to the table. Thank you so much once again for joining in and taking time out for this engaging conversation.